On, yep. Okay, the recorder is on. So I'm going to talk about a couple of systems. One longer term system that was pretty good for me, and this scalping system that was also good for me. And this got me on my road to profitability. Um, and I still use this uh, on occasion if I'm not really clear about certain things, or if I'm a little fuzzy. I go back to this because it's kind of remedial in its approach. So I'll talk about the origin of it, and then we'll get into the indicators. And again, the indicators, with the exception of these arrows, the indicators you can get on any platform. And you don't technically need the arrows, but as I started to show this to other people, I found that the arrows for new traders or for traders that were looking to build their confidence, the arrows helped quite a bit with that. All right. The idea in any trading system is you'd like to buy down here and you'd like to sell up here. All right. Let me thank you, Tony, for explaining that. Um, is Tony here? Oh no, Tony helped me out with one of my tools, and just wanted to thank him for that. I'll just segue a bit. I made a tool, a Fibonacci tool, based on some stuff I've seen. Carolyn Borden, the Fibonacci Queen, and
Oh, the extension one, you mean?
yeah. Oh, you are here.
Yeah. Yeah. No, I'm Mike, not Tony.
Oh,
Tony's
okay.
Tony's the good-looking one.
Oh, okay. Um,
Yes, with the sexy voice.
yeah, with the announcer voice. Let me delete these so there's no confusion.
Hello.
Um, yeah. So what it is I pieced together some Fibonacci information. Let me see if I have the chart here. The fib amp. No, it's not here. But I pieced together some general information from Fibonacci's and put together profits and extensions and all that. So I'll just show you what this does. You draw a Fibonacci. Now I've added some levels down here, as you can see. I didn't put the pricing in on them, but I added some levels. All right. Um, and as you can see, this was our Fibonacci we drew. So we're looking for a bounce off of one of these levels, a bounce off of one of these levels, and then a move short. All right. So just to show you the quick and dirty of it, then I'll get into the other thing. What happens here is that this is my Fibonacci drawn from here to here. So if I get a bounce off of a green level, then my profit target will be the next green level below it. If I get a bounce off of an orange level, then my next profit target would be the orange level below it, and so on. And
Hmm.
pink would relate to pink. Okay. So in this case, we've got a bounce off this 50, which is a green level. All right. And we had the right kind of candle signal. So my stop would go back at the 618, and my profit target would be this level here. So in essence, I'll pick the middle of this candle just to say if this was the entry. We've got a 190 pip, 100 pip potential take profit. Ah, we've got a 100 pip potential take profit and about a 30 pip stop.
Oh,
So
nice risk reward.
yeah, exactly. Now there are a couple of key candle formations that we'll look for in order to determine a true reversal or not, but we'll get into that later. But that's essentially what this does. All right, and then at this point I can just take this fib off, so I don't need that, and I've got my levels, and then I can just pop a line in what was it, a green level? Pop a line in here. I forget what level it was. Okay, but anyway, I can pop a line here and put a line there, and then get my prices and set my trade up and all that. Then I have another script. I drag it on the chart and it eliminates all the lines. There's a company that does something almost identical to this, MTI, um, the FX Chief or something like that. There's a lot of this is in some of Carolyn Borden's work. Uh, and a few others. So I just built a tool to sort of take advantage of that.
Yeah.
All right.
Ideally, you want those coloured lines on the right-hand side of the chart, really, Lou, don't you?
Well, that's a tweak I could add later. I wanted to get
Yeah.
the functionality correct first,
Yeah. Yeah.
but I would, it would be nice to have a short lines right down the side here.
Yeah. That's what I was thinking. Yeah.
All right. So going back to that system, I was looking to sort of buy here, sell here,
Yeah.
buy in here, sell in here. And I just kept playing with all kinds of indicators and everything else. And there was a book, I think by Sidus,
Sidus. Yeah.
that talked about all the various trading systems and methods. And the most popular of all the indicators was moving averages. And the one indicator that had the highest success rate, even though it wasn't great, was also moving averages. Okay. So I said, okay, well, if they've done all that research and they found that moving averages tend to be the most reliable, then let me look at moving averages. And this is how I think about everything. I'm trying to not reinvent the wheel, but go, follow the footsteps by the people before me. So I began throwing moving averages on the chart and all sorts of moving averages. And that's a 60. I'll put that up there. Oh, God, let's change that color quickly. That's a 90. And so there was a 90, and I'll add like the 21. I'll add a 20 rather. And I began, just experimenting with all of these to see which moving averages gave me the best deal. So my next step was to ask myself, how can I get as close to this point as possible, or as close to this as possible? How can I get as close to this turnaround as possible? So I began experimenting with more moving averages, and I came across Guppy moving averages, which are, as you guys know, it's a series of moving averages evenly spaced apart, representing short term and long term. And I don't think I have a Guppy template here. But there's a guy, the Guppy moving averages, the Guppy system has been around for many, many years. And there's somebody using the DOTS system, and they took the Guppy moving averages and kind of applied it to that. But a Guppy is basically a 2, 3, 4, 5, I'm sorry, I'll say 2, 4, 6, 8, 10, and then you skip a few, and then it's 21, 23, 25, and it's every two digits up. All right, and what that essentially represented was the 2, 4, 6, 8, 10 represented short-term buyers, and the 20, 21, 23, and all that represented the long-term buyers and sellers rather. And when they all got into a cluster, like right here, I know I have this on one of my brokers. Let me just see, because I'm always all right. I'm not going to look for it now. Let me just go back to my what we were doing, and then I'll find it later. So to make a long story short, what I found was, oh, and the trading system out of that book mentioned I'm a little scattered here. The most successful trading system of all of them were moving average crosses. So in this case, if we wanted to play a cross of the 90, uh, I'm sorry, a cross of the 20 over the 90, that would be our system. So we'd look for an entry here and follow that down. Or we'd look for an entry long here and follow it up. Okay, or a possible entry short here. Now, what would happen with many of these systems, you'll get into these areas like this where it could chew up all of your profits because it goes up for one candle, comes back, goes up, comes back, goes up, comes back. So since they discovered that moving average crosses tended to be uh, the most profitable, but again, it wasn't super profitable. I decided to see what moving averages can I get that can get me as close to this as possible. And what I ended up with after a lot of experimentation was the 5 period moving average. Um, and in particular, I used the 5 open and the 5 close. Okay. So the 5 open and the 5 close. And when they decided to cross is when I would look to enter a trade. All right. And look at how close I am to where price actually turned around. I'm just a couple of pips away from like the actual turn in the market. Same thing down here. Well, I didn't get this bottom, but I got close enough to the bottom that I got like the meat of the trade. You follow me?
Yep.
So I put the 5 open and 5 close on the chart.
Are those EMAs, Lou?
Yeah, let me just go in and show you. 5 simple open.
Oh, simple. Okay.
Yeah. And 5 simple close. And when they crossed, that tended to be pretty damn close to the top and to the bottom. Now let me go back to the black and white chart. And let's make this the 5 simple open. And we'll make it blue. And we'll make it a nice thick line. And we'll make this one the 5 simple close. 5 simple close. And leave that blue. No, make this red rather. And make that a thick line. All right. So now if I zoom in here, now if I look at the bottom here, we'll zoom in and look at a few of these. I now have a situation where, look, I mean, I can't get any closer to the bottom of this turnaround than right here. You see that at the open of this candle, or I'll pick the open of this candle because that's an ideal entry. So now I'm in right there and I can hold on until I get an exit up here or until I get my number. Okay, and this is on a 15-minute chart. All right, so that 5-5 cross, that got me pretty close to the action. You look at this cross right here. Okay, this candle closes below both 5s, and that produced, you know, my 10 pip number that I'm usually looking for. This candle closed above both 5s, and the 5s are in the right order because you want red above blue to go long, red below blue to go short. All right, so when this candle closes, the moving averages were in the right order, and then this was my 10 pip hit. Then this candle here closed below, and this should have been about 10 pips. It's about 14 or so. But you see the idea. It gets you really, really close to the action. Not much meat left on the bone. Your stops are relatively tight. All right, so I said, okay, that was good. I like that. However, I would come into situations like this, and I wasn't sure, well, gee, which way should I go here? Because, you know, I'm going here long. I want 10. Oh, damn, it's 10 pips. I want to find a losing trade. This should be a losing trade to go long. And let's say I want 10 pips, and my stop is 10 pips. So this trade would have been a trade that didn't pan out. And sometimes you get a number of these. So I wanted to filter these a bit. So then I went back to what I was using for my intermediate trend, which was the 18 moving average, which is again from
Larry Williams.
yeah, I can see his face and I'm trying to place the name. Yeah, Larry Williams. Thank you for that. And so I added the 18. I said, you know what? It would make more sense for me to take trades in the direction of the 18. And now, as you can see, if I take this and I hold on for my 10 pips, unless I close below the 18, I don't take this short trade. I don't take this short trade. You see what I mean?
Yep.
I may get banged out on this, but at least well, it went 10 pips. At least I'm with the general trend.
Yeah.
Now in here, I may lose one. I may lose one. That's trading. No system is 110%. Nothing. All right. And now I'm short now. This candle has closed below both fives and the 18 in a nice tight knot. Okay, I hold on to this until I get my number or I get a cross through the 18 down here. That's the cross through. Or if my number's 10, I'd be out here. I could re-enter right here. Red below blue. You follow me? And that's a conditional candle, by the way. And I'll get into that also in a minute. Okay, this is a conditional candle. That would be a short. And now boom, boom, boom. Here's my retrace. This candle did not close below the 2 5s. You see that? This one looks like it closed even, so this would be my next trade. And as you can see, I've got the cross of the 5 crosses over. I'm short here, and I'm looking for my 10. That went 40, or an exit down here. So either way, I would have made my 10 pip hit following the 18.
Is a 15-minute chart the minimum chart you'd use, Lewis? 5 to
I use 5, 15, and 1.
Oh, okay. Right,
Yeah.
1 as well. Yeah, wow.
Oh yeah.
Yeah. Okay.
Because once you see a setup on a 15, you go down to the 1 and you can sniper.
Oh, snipe it. Yeah. Okay. Yeah.
You got what I'm
You'd
saying?
start off with a 15. Yeah. Okay. I got you. Yeah.
Yeah, I want to catch the biggest trend. So if
Yeah.
I see if I see this setting up, I'll go down to a 1 and look for the same thing on a 1.
Yeah.
So then I wanted to take into account a bit of a broader time frame. So then I added the 200, just in part because it's the one moving average damn near every major trading firm has on their chart. They almost always have a 200 and a 50. Okay, so I decided to put the 200 on for the longer term trend, and I can't do the math, but I know the 200 probably represents like a 20 moving average on a 4-hour chart or something like that. I just don't do that math in my brain that quickly. But you get the idea. But for all intents and purposes, that's what my 200 would be. So if I'm below the 200 and below everything else, when this trade shows up, I can go in with a little heavier lot size because I know I've got the big trend in my favor.
Yeah.
Let's close this.
Would that big trend influence what you would have done if so? Would you only take the trades above, long trades above and short trades below, or you'd still use the 18 for the entries?
I'm still primarily using the 18. What this tells me, and this is an Uncle Lou thing. What this tells me is I can go with a larger lot size if I want to go long.
Yeah.
That's what it tells me. But I'm still going to use the 18s and the 5.
Right.
Because even if I just look at a cross of the 18 and 5 right here, this is a decent 10 pip trade.
Yeah.
You follow me? Over here,
if you take short trades, you'd lower your lot size on that particular page we're looking at.
Correct.
Yeah.
Oh, absolutely, yes.
Yeah.
Yes.
Got you. Yeah. Okay.
So if you squeeze this in, you'll see that that relationship works pretty well if I follow that. So once I'm above this 200, you see this was a success. This was a success. I might have had 1 or 2 losers in here, maybe 1, because I'm only going long, and then I get all of that back here.
Yeah.
And then this was a success. This was a success.
Yeah.
Now I'm on the short side, and this was a success. This was a success. This was good because I'm only taking short trades when the 2 5s cross. So I eliminate a lot of bad trades.
Yeah.
Doesn't mean I still I don't get bad trades, but I eliminated a lot of them.
Yeah.
So what I wanted to add then was I became interested in MACD and using MACD for divergences and also for general trend. So I inserted a MACD indicators oscillator MACD, and I'll leave it at the standard one for now. And the colors, this should be blue, and we'll make all of these a little bit heavier so we can see them. Okay, so now what I was doing here with the MACD was looking for divergences. Um,
You got
and
one straight away.
yeah, absolutely. So I would see this, and then I would see that. Now, a simple way that I explain divergences, again, this is an Uncle Lou definition, is that yes, price went higher right here. Prices did make a new high, but there were fewer buyers involved in that process. We made a higher price, but fewer buyers involved, meaning more sellers were going to come into the market. That's how I look at it so I can keep my brain right about divergences. You got me?
Yeah.
Not technically correct, but it works for me. And I'm the only one that it really has to matter for. All right. So again, more buyers, I mean, higher prices, but fewer buyers. So, and that's with the standard MACD. So I would look for divergences, and then if I saw a divergence that was lining up the right way, that's the only time I would go against the 200. Okay?
Yeah.
Because a lot of times I wanted to see, gee, how can I catch this move down? 'Cause that's a lot of pips, and I'm just letting it,
Yeah.
go by. So then I started looking for something that would give me uh, a few of these, not every one, but give me enough of them that I could catch quite a few of these. And divergences worked out quite well.
Mm.
Let me just look for another one. Okay, here's one.
You got one there.
Yeah, right here.
Yeah.
Again, higher prices, but fewer buyers involved.
Yeah.
All right, and that would be, the what I'd be looking for. I'm just looking for a long right now. I don't see one, but I'm pretty sure you guys understand the concept.
Yeah.
So that's the only time I would go against the 200. Every time I made a new high, I would start checking my MACD, looking for divergences. So then I began looking for something that would give me alerts. Because if I'm on the 15-minute chart, I didn't have a lot of patience back then. I have more patience now, than I did then. And I began looking for something that would give me alerts to let me know when I had this cross situation. And that led me to the B bands indicator. And I'm just going to throw the B bands on this chart. Um, oh no, insert indicators, trend, and Bollinger Bands right here. And I'll leave it at the default 20, and it's dark blue. So let me blow this up a little bit. One of the key things with the B bands is you like to see price come out of these compressed areas. So price compresses, and then or like down here, you want to see price come out of this compression and take a long or a or short position or in here. So I'm going to take this off, and now I'll put the B bands, the actual B bands indicator on the custom indicator. Oh, I'll do it this way. Wait a minute. Go down here, go up here, and B bands V2 and colors, red and blue. This is going to show you everything, so it's going to look like a mess here in a minute. Okay, so what you see here is when this arrow appears is when this candle price comes down and trades across this candle. When price breaks this blue dot, that's when this arrow shows up. Now in real time, price will go below this blue dot 1 pip, you'll get a red arrow. It goes back above it, the red arrow disappears. But once the candle is closed, if price is below this price at the blue dot, then that candle will never repaint. All right. So it looks a little fuzzy here because I've got everything kind of crunched together. There we go. Now, the other thing that this happens to work out quite nicely with is that it's very similar to parabolic SAR. And what parabolic SAR is, or one way of using parabolic SAR is to use it as your stop loss. So on this close, that's my stop from here to the red dot. And then at the close of each candle, I would adjust my stop loss and follow it all the way down. You see that until I get a close back across, which was right here.
Yeah.
And then I'd be out of the trade there.
Yeah.
All right. And again, following the 200, I won't take this long. You see that? I
Yeah.
don't have any divergence, so I'm not going to take this long. This is my next trade here. And then I follow the parabolic, I'm not the parabolic star. I follow the B bands dot with my stop loss, and my exit ends up over here somewhere. So I don't, if I follow the parabolic star, I only make 4 pips on this. If I wait for my number, and if my number is 10, 15 pips, that's not even a contest. Completely done deal.
Mm.
Okay.
Yeah.
So in here, I don't have any divergence I can really use off of the MACD. So I don't get this long. Okay.
Actually, you do.
Well, I see a small one here.
Before that, I mean, way back in the
Where
last
here?
swing low, yeah.
Oh, wait. Let me give you control. Because now, and I'm looking for like real obvious, like, oh wow, that's the kind of thing. We used to call them wow trades. And in one room we called them hand rubbers, but that just offered up too many jokes.
Yeah, we got
Yeah.
ladies in the room.
Yeah.
So,
Oh, there
right
you go. Yes, you're correct. You're correct. And that would be when I would buck the 200. So on this arrow here, once the divergence kicks in, then I would take this long. You're absolutely correct, Daryl. I was looking for something like right in here and didn't see it, but there technically is one right here. Looks like a small one here.
and I missed on the B bands. What are those? Where are those dots in relationship to Bollinger Band?
Let's put the Bollinger Bands on. What are we adding?
Bollinger Bands, second one
Oh,
down.
okay, yeah. And I'll leave this at 20. And they don't relate directly to Bollinger Bands. But what you'll see is we're breaking this center Bollinger Band, that center moving average.
Okay.
Which is 20 anyway, isn't it?
Right, exactly. So it's really, really close to breaking that 20.
Yeah.
Now, again, this indicator is not Bollinger Bands, but it's a derivative of it. Okay?
Yeah, because you changed it to use just the arrow, didn't you? You took the dots away, didn't
Yeah, I
you?
took all the confusing stuff away. And as you can see, we're crossing the 20 above, we crossed it below, we crossed it above, and this is kind of what I wanted to eliminate.
Okay,
All right.
I'm going to ask a confusing question here, and if it's too confusing, just pass on it. It's not that important.
Go ahead.
But, how did you get the formula for these dots?
Oh, no, the indicator puts it on. I didn't build this indicator.
Right.
I found it. Okay, and maybe one of our experts could look in here and get the formula for the dots.
Okay.
See, it's an old indicator. Oh, wait, let me do, well, Tony's not here, but let's go to modify. And this is essentially the code. And I never even bothered, as long as it gave me what I wanted. And you see here, it's based on Bollinger Bands. The deviation is there. The offset, it's the same settings as Bollinger Bands.
Yeah.
Okay.
All right. So I'm not sure what they do for the dots, but something I may ask Tony. But I found that the dots in the beginning were very effective because I could follow them through. All right.
They almost look like they might be 10 instead of 20.
It could very well be.
Yeah. Okay.
So I'm going to take the Bollinger Bands off. All right, and then I'm going to take the lines off. I forget which one of these are the lines. You know what? I'll leave them on for now. But that's essentially what I was looking at. So these arrows would give me decent trade entries, particularly with the 200 and with the 18. These became really high probability trades. All right.
Yeah.
Now, when I began scalping, I had like a shorter time frame to work, not a shorter time frame, but a short amount of time to spend at the computer. I changed this from a 20. Well, I got greedy is what it was. To be honest with you, that was the exact motivation, was just greed. What I wanted to do was to catch, if you notice, you see where on this particular trade, we don't get into this trade until up here. Nothing wrong with that. Still made you 10 pips. But I wanted to see, can I get this arrow down here so I could get in down here and maybe catch this 20 pips too?
Yeah.
And experimenting with that over and over and over again, I came up with the, I settled on 5, which I believe is my default number. But I'll double check it again because I can make it, faster or slow or whatever. So I changed that to a 5, and now look where I'm in this trade. Okay, now I'm catching all of this. Okay, I'm catching 80 pips until I get my next red arrow to tell me to get out. All right, and that was all just a matter of just greed. I wanted to get as close to this turnaround as possible. That was my mission. And if you look at where these, go ahead.
Yeah, you changed the settings to what?
A 5. I'm gonna drop a zip file in the room with all the templates and indicators on it and all that. Okay. So now this is as close as I could really get. Okay. And if I zoom out a little bit, let me close this. And if I zoom out, let me just catch a trend here. You'll see that all of these arrows are winners. Every one of them, with very small stops. Now, a couple of these, I would, like, me, like, what is this? 20 pip stop, I'd bring this down to like a 10, and I might have got popped right here. But that's me. I tend to run tight stops. But if you use the traditional stops, like a 20 pip stop, let's say on a 15 is more traditional, then you're safe. And you see the majority of these are all winners.
Yeah.
All right. And I'm only looking at the red ones. That's all. The other thing that I do with this is I try to look at my MACD. If my MACD is below 0, then that's another confirmation to only take the short trades. As MACD starts to slope up, I may cut my lot size on some of these short trades. Okay, because remember with MACD, when the MACD starts to slope up, it's only a pullback in the downtrend until we break 0, then you may have a new uptrend in place. Okay?
Okay.
So again, as you can see with the MACD, this is bucking the trend though, but I just want you to see if MACD is short, I have more confidence in taking short trades. All right? Now my MACD settings, because I was always looking for divergences, are 534.5 because of fib numbers. And that had a big influence on the other numbers I picked too. Okay, now we still get this divergence, we still get, but you see the shape of the MACD is a little bit different. But what this does is this will help me catch a few other of the subtle divergences.
Faster.
Excuse me?
I just said it's faster, isn't it? Yeah.
Yeah, a little bit faster. So on this one, I may have been, the trade may not have panned out. But you know what? I would take it anyway. All right. And again, I'm bucking the MACD, and it's 30 pips is nothing to sneeze at. I take that trend because I have a high probability that I'm going to get a good move in my direction. So
Yeah.
cut my lot size and go for another 10, 12, just based on the divergence alone. Here's another one. And you'll see you pick up all these subtle divergences that you don't see initially with the traditional settings. See that? So I'll take this one. I'm bucking the trend, but I'm going to go for 10 or 15, cut my lot size. You see what I mean?
Yeah.
All right. So that was my primary reason for using MACD.
In your experience, Lou, is MACD the best one to use for divergence as opposed to any of the others like stochastics or RSI? Or I mean, they all have divergence, I know. Just you found MACD to be better, did you?
Yeah, I did.
Yeah.
Only and primarily because of what it measures. If you remember, it's taking the distance of the 12 and the
Yeah.
26. Well, in this case, the 34 and the 5. But it
Yeah.
takes the 12 and 26, measures the distance, then takes a 9-period moving average of that
Yeah.
difference.
Of the difference. Yeah.
Right. So as the 12 and the 26 collapse, then MACD accordingly collapses with it or expands with it, and the speed of which it collapses is what is going to end up giving you some of these divergences.
Yeah.
So, and then now I'll go to the final blue chart. Then on the actual blue chart, I added my boxes. Okay, so in this blue box right now, this is a done deal. I'm only looking for short trades. You see that? So when this comes on, I see I had an arrow, but I missed that one. Oh, wait, how far back are we? I don't want to go too far back because then I won't be able to find it. Okay, so here the 200 is in here. I'm basically looking for a long trade. All right, so
Yeah.
this would be a good signal here. This would be a good signal here because this candle closed above all three moving averages. MACD is long. And Dracula is entering the room. Everyone bow accordingly.
Dracula?
Who's that?
You guys don't hear that music?
No.
Oh,
No.
you don't?
No.
I've got this music playing over here.
At your
I can't hear
house,
it.
I have no idea what that is.
uh, we have somebody new in the room here.
Oh, Spa Effects? Spa, what's your name? I don't know what. Oh, wait, let me just see something. No, it's not him. I don't know where this is coming from. Where is this music coming from? I've always got like a bunch of windows open. Let me just close all of my. I can reopen them all later. Now I've just closed. Okay, I closed all my browsers, so it's on my side. I'm surprised you guys didn't hear it. Okay, so I don't know who SpaFX is. Okay, but that's okay. So here would be my first basic entry, or here would be this is pretty close, but not necessarily a cigar. But let's just see how far. This is 7 pips. So yeah, if I go down to like a 10 pip stop, that would have been a decent entry long. You see that on that blue arrow? Because I'm only looking for long. This blue arrow, this blue arrow, this blue arrow, that blue arrow. So no losers in here. You see that with a 10 pip stop on a 5 minute chart. And
Yeah.
this is
And is that
pound dollar.
200 on there, Lou, or is that the 89? That one?
Oh, that's a 55.
Oh, right.
There was
Okay.
a yeah. I put a 55 in here for just to play with the fives. I was on a five kick, but usually it would be the 200 in here. But let's
Okay.
just make this a 200. Oh, no, I'll add a 200. Wait. Insert indicators. Trend, moving average, and uh, oh no, I'll leave it at 200. And let's see what color can I pick here. I'll pick yellow and leave it at a dash line. So you see, the 200 doesn't make the 55; just brings it closer.
Yeah.
Uh, by the way, Lou, on that 55, that's really a midpoint in everything that I've looked at. Actually, I use a 60, which is really close.
Okay.
But I mean, you will. Okay, what I'm talking about primarily, is that quantum thing that I worked with a little bit. I would never see sell boxes below the 60. Actually, I did see 2 yesterday, but they were just barely below. And I would never see buy boxes above the 60.
Okay.
So, I mean, it kind of breaks that up nicely. Just thought I'd throw that in there. It's kind of a line in the sand between general bulls, general bears. Finished.
Okay, that's a good point to take into account that 55 may be a middle because usually they'll have the 200, the 100, and the 20, and 55 would be right in the middle of all that. So as you can see this morning on the pound dollar, this is basically a no-brainer. Okay, with a nice a moderate stop, 10, 15 pip stop. And then here during London, um, I'd be looking for divergences. I don't see any here. But we may have this trade would be one that would have been a 10 pip loser right here. But then you'd have no problem taking this one because now you're below all three of your guys,
Yeah.
and now you've got your 10 back. So remember, you never panic on a trade that doesn't pan out. So that's pretty simple. This works fairly well in Asia too, especially when there's Asian news. Because Asia tends to move really slow and you don't have all that whipping going around. So here again we have a US box. We have an arrow before our box starts, and it depends on what time you guys start trading in the morning. So you can either, if you're up, you could take the arrow, all right, or you can wait until you get this close below these three moving averages right here.
Yeah.
And again with a 10 pip stop at 13, that's about where I like to sit. Whoa. Oh, Daryl's still got the mouse. Let me fix that. Yeah, no problem. My friend, I work with a programmer, and we call it mousing each other.
Sounds
When we're looking, yeah, I know it just has a weird kind of as long as they're not gerbils, okay. Um, so anyway, this would be the our entry here, okay, based on the 55 and all that. And again, there's your 10. You follow me? And then if we look at this entry here with a um, 10, 15 pip stop right in here, we're pretty good. We don't get banged by this. All right. And again, that's another 10. And you can follow this all through the day, as you can see, as long as you're riding, that 55. So for new traders, it helped build confidence and help them with their, because
Yeah.
help them with their chart analysis. Because once you get the pop-up box that says a fresh arrow, you don't automatically take it like a lemming. You know what I mean? You come back and look to see what the conditions on the chart are.
Yeah.
Just keep in mind, oh, I got all this stuff in the corner here. You keep in mind, like you see this candle's red, all you see is this red candle.
Yeah.
You can't see the future. So you come and look at the conditions here, and then you would make your decision whether or not to take the trade.
I
Now,
think it looked better on the original setting actually, and I know you changed it to a very fast setting, but
yeah, well, exactly. I
the
changed
arrows,
it to a fast
arrows
setting.
looked better on a 20. They weren't quite so confusing.
Yes, I completely agree.
In fact, you don't
Um,
even need the arrows really with everything else you just described.
well, no, yeah, if you go out to a 15 and all you want to do is just take a close below these two fives,
Yeah.
I mean that, you don't even, as you said, you don't even need the arrow. But again, for new traders, I found that this was very helpful for them.
Yeah.
Um, so let me go back to the 5. And again, looking for divergences. This was an oscillator I designed. This is a Turbo RSX, which is basically your RSI, but ultra smoothed out. And this is a 3 moving average applied to that RSI. So when these two crossed, sometimes this cross would come in a candle or two earlier than the arrow, as you can see there. And if you look down here, where they crossed down here was earlier than the arrow. You see that?
Yeah.
So on many occasions, you'd get this cross before you'd get the arrow. So I don't use it so much. What I was looking for primarily was a break of the 50 level. So when this RSI broke 50 right here, this would be another indication that I've got a good momentum short. Um, and I don't want to get too much into it, but let's say I assume this run has extended itself, and I'm thinking, let me try to grab the pullback. Well, if this is below the 50, even though I'm above the 55, if that RSI is telling me prices are heading down, I may take a bite on this and trade it down to the 55 or down to the 200. even though MACD is long. You follow me? These two are contradictory to each other.
Hmm.
But that's a
Would you mind,
subtlety that's a subtle thing. I don't want you to look at that as part of the basic setup.
Yeah.
would you mind showing the settings on the turbo?
Yeah, sure. And there's a template in there and all that.
Okay.
It's a 7. So it's like a 7 RSI, but just ultra smooth. A regular RSI would just have a whole bunch of saw teeth in it.
Yeah.
7 LEN, so that must have to do with the length or something.
Yes,
Yeah.
correct. And then this blue one you see is a 3. 3 simple, and this is important, apply to the first indicator's data.
Yeah.
Yeah.
So that cross, and even this cross alone, especially when you get to these overbought and oversold areas, are pretty good. On their own, they're not bad, as you
Yeah.
can see here, because first you have to get below that 30, and then you have to wait for the cross, and then wait for for the RSI line to get back above the 30.
Yeah.
And that's you can't ask for better than that,
Yeah.
you
Do you
know.
get much divergences on that turbo, Lou?
Yeah, you do get divergences on this also, but
Even though it's smoothed out, you probably don't get so many, do you?
you still get a good number.
Oh, okay.
Yeah, you
Mhm.
still get a good number, but the trick with the divergences here is you want to follow your blue to your blue
Yeah.
and not so much the other way around.
Okay.
I give you an example here. From this blue to this blue, you see we made prices went higher,
Yeah.
and yet from that same area here, I mean the oscillator went higher, but prices went lower,
Yeah.
and that's an indication that we're going to get a drop, and we're oversold, overbought. I'm sorry, overbought.
Okay,
So
so
that arrow becomes like a real powerful signal there.
that looks backwards.
It is backwards. It's hidden divergence.
Okay.
I'll post a divergence chart. Let me see if I
All
have
right.
one in this file here.
Never mind.
Okay, well, there's 4 types of divergence, and I won't get into that because we'll get too far off course. But this
Yeah,
is
that's
what's
what I'm
called
saying. Don't
hidden.
do that. I'm just, okay, never mind.
Yeah, it's
Hidden
called hidden
divergence
divergence.
and all that. It's just complicated.
Yeah, yeah. It's actually easy, but it's for a separate day on its own because
A
the
whole new
thinking.
lesson, isn't it?
Yeah, it takes a while to learn it the right way, and most people just bail out and just do regular divergence.
Yeah.
But these are money makers too. All right. Delete that, and then delete that. So now let's go back to current time, and let's go look at a few. Now you see here we have an arrow to go short. So the first thing I'm looking for would be, are there any divergences? And I don't see any leading from here to there. You see that?
Yep.
Now, had there been a divergence over here on this MACD, I'd be looking to take this short back into the 18 or the 55.
Yeah.
So, and again, there's a pop-up box that when you get a new arrow, but this arrow is not set yet. This candle has to close, because
Yeah.
if this candle goes all the way back up and trades above the Bollinger Band, which we don't see, the arrow will disappear. So
Yeah.
it doesn't repaint. It just waits until the situation is correct, and then it paints.
Yeah.
Also, this indicator in here, signal bars. This incorporates the spread. How far is it from high to low, and what yesterday's daily average was? Okay. Oh no, this should be yesterday's daily average if I remember correctly. I haven't used this in a while. So it's got all that data in there, and it shows you what the current price is, and as you guys know, I get blind and thick-thumbed, and if I'm trying to set pending orders, it just so I like this giant price here. It's easy to see if I'm at a 00 or whatever, or if I'm near one. Now, these other small indicators in here, this is the MACD, stochastic, and the EMA. I don't know why they put STR in here, but that's what it is. Okay. So, and you see it says M1, M5, M15, M30. So when you see the colors are mixed up, it's basically an indication of a sideways market. So let's find something where, okay, so now this is telling me on Dollar Chef, the M1, M5, M15 are all red. So that means we're short on the MACD, short on the stochastic, and short on the EMA that's built into this. And
Yeah.
if we go to current time, we should see an indication of that. Okay. So as you can see, from pretty much the start of this period, we've been short.
Yeah.
And the indication is still short. So it's an added thing for confidence for scalping.
Yeah.
Because keep in mind with scalping, you need to really look at a lot of information quickly. But you don't want so much information that it blows you out of the water. So while this may look complicated to someone that's never seen it before, keep in mind that when the pop-up box comes and says, hey, you've got a new arrow, then you come to the chart and then you look at, okay, am I below my 200? Am I below my 55? Then you can make
Yeah.
your decision whether or not to take the trade.
Yeah.
But if you were to sit here and try to analyze every little twist and, oh, but this is doing that and this is bouncing off of this and I got the arrow here, you'd go just batshit crazy. That's a technical term. All right. So you let the machine do its thing. You know, I heard a football coach the other day. They were asking him, how were you able to get to the playoffs with a rookie quarterback? And he said, well, what the quarterback's job is to allow the other people around him to do their job. Let the team be supportive of him. So when you have these different indicators and tools, let them do their job. If you're not going to let them do their job, why did you put them on the chart in the first place if you're going to try to outthink them? You follow me?
Yeah.
So when the arrow pops up, hey, I got a new arrow, let's go take a look. And then I can make an assessment. And it allows me to trade on several different charts at a time. Because this arrow popped up on this 5-minute candle. It may not pop up on like the pound dollar for, until the next 5-minute candle. So it's not like when it pops up, I have to check every chart.
Yeah.
It will tell you what pair the arrow popped up on.
Yeah. Yeah.
So let's look at dollar yen, and you see dollar yen for the most part here was long.
Yeah.
All of these time frames are long. And if the M1 is short, that doesn't mean too much because it's just a pullback. You got me? You see how we have that little red bar there in the M1?
Yeah.
All right. So the M1, this is probably what that might have been in here somewhere. Or if I go to an M1, this might be, and what is that, the MACD? Yeah, that could have been this, or you got 3 red bars here right now. That's why that M1 is short.
Yeah.
Okay, but for the most part, this was long most of the day.
Yeah, well, the MACD histogram's getting lower there, isn't it? So.
Yep, sure is.
Yeah.
And as you can see, this thing did trail up long. And again, now here, unless I had a divergence, and I don't really see one. Well, I see another hidden divergence. I'm going to draw it anyway. I know you guys might not catch it, but from there to there, and if I follow this from here down, that's a hidden divergence. That's telling me this is going to go long. But don't worry about
Yeah.
that. Yeah, I don't want to confuse you with that. All right, but that's something that I'd be looking for. And then I'll take this. Now, if there's no trade here, if there's no divergences, and if there's nothing that I can really say, hey, this is a good deal, and I'm going to take this. I'll leave it there for now. Remember the rule is if you don't see anything really clear on this chart, go to another chart. Go to the chart that's got something real easy to read. Okay, like this entry here was real easy to read. This entry here was very easy to read. Okay, this closed below the 18 and both of them, and it should have given you, what is this, Aussie dollar. Okay, it didn't give you 10 pips, but you could have certainly walked away with, if you're scalping, remember anywhere from 3 to 8 is my general scalp. Okay, so you want to go to a pair that's got a nice, easy to read chart. All right. Um, Here I'd be looking for divergences. Got a little bitty one here because this is pretty much straight across the bottom here. And you see this is lower, so I would take a chance on that. And that's essentially what this system does. It's primarily a trend catching system. The other thing you could do with this too is when you go out to your 1 hour chart. Oh, by the way, and this works very, very well on, but you have to change this Bollinger Band setting. This works very, very well on the higher time frame charts also. If you
Yeah,
want to set
I
one,
remember being in a room with you, Lou, and Mike Schumann, and I think you had, if I remember, you had a 1 hour chart with the B bands indicator on it, with all the dots and everything showing, and you just were showing him just how to trade one color arrow to the next color arrow, stay in the trade until you get the opposite color, and it was amazing how it worked.
yeah, well, but you know, Mike uh, has a very interesting ways of looking at charts and analyzing information, but it was relatively simple. You couldn't make it any simpler.
Well, to say, I understand that about Mike, and there couldn't be anything simpler because when you got the blue arrow or whatever it was, you went long, and when you stayed in the trade until you got the red arrow, and then you went short. So
Yeah.
it was simple as hell, really.
Yeah, so like in this case, this is a 66 pip win,
Yeah,
okay, and then this would have been a 6 pip loss, but now you're short again,
yeah,
and
yeah,
now you've got 100 and something pip winner.
yeah, exactly. Yeah,
Yeah, so it works very, very well, and your
yeah,
losses tend to be in line. Now,
yeah,
again, this is set to a 5, but you know you
yeah,
change it for the longer time
yeah, yeah,
frames.
yeah,
And here's a divergence that's more in line with what everyone's used to looking at. See that?
yeah.
I just want to draw it so everybody can see it. Come on, cooperate. Yeah. And we also have it on the MACD. So yeah, I would open up the lot size a little bit on this one. On
Yeah.
that arrow, it's against the 200, but I'm taking that right back here, and that had a potential again for 80 pips before we got the opposite arrow.
Yeah, yeah,
Okay,
yeah,
so it's simple, um, and what it does is when you get the pop up arrow, and you have to turn that pop up on and off. By the way, I just want to show
yeah,
you that.
yeah,
B bands B2. See sound on, true or false.
yeah,
All right, and I just want to see where the pop up box is. I want to make sure it's popping up. Oh, here it is. Oh, it's all the way over here. That's why I didn't see it. You see B bands going down on EuroCAD 60-minute
yeah,
chart. So it can't be any simpler. And then you go to that chart and then you make an assessment. Um, and again, based on this is almost all blood red. So I'm thinking short the whole way on this EuroCAD. And now that we have this arrow, even though this arrow is not complete, we can go down to a 15-minute chart and look to trade in that same direction.
yeah,
You see that?
yeah,
So there's four candles, four 15-minute candles. We can go down to a 5-minute and get even better than that
yeah,
because there are 12 5-minute candles in an hour. So
yeah,
it offers a lot of opportunity, but it's one of those things you got to play with it, tweak it, get used to seeing how everything moves.
mm,
So let's go to current time. I just want to walk down a few pairs. Then I want to show you another long-term system. Um, and again, you see here where and also don't forget the stuff you already know. Yeah, you get what I'm saying? Like we got a price trap in here.
straps, yeah,
Yeah, don't forget any of that stuff. All of that comes into play, but it enhances. So now if you get a price trap and you're short, you're not sure about the entry, and if you get a short arrow entry on a price trap, well, duh, most of your work is done for you.
yeah,
You know what I'm saying?
yeah,
So if you really don't know, push comes, you see, there we go. There's our potential, short if we wanted to play this short, which is, what I would do now because we've got that. We made this high but we didn't make a new high here. So
Yeah.
this looks like this is our drop down, pull back, could be another drop back down into the 200.
Yeah.
All right. So, but let's just scan a few pairs. And I hope I didn't go too fast with this because I wanted to explain the genesis of it. And you look at how close we are. Look at how close we are to that turnaround.
That's
This is
great.
what I like. You can't get, oh shit. Oh no, she's on the bus. Someone just tried to send me a message here.
Cat's getting
Oh,
killed.
these guys. Let me turn this phone off. Um, okay, so let's any thoughts, questions, observations here? You see that this thing is all blood red.
Yeah. Yeah. Well, cat's getting killed after that bad number earlier. So.
Yeah.
I was also watching that.
Well, no, the CAD is actually doing pretty well because remember, this is showing us dollar weakness. Whatever you see on the chart is happening to the first symbol.
Oh yeah, of course it is. Yeah.
Right.
Yeah.
Whatever you see on the chart is happening to the first symbol. So this is telling me dollar's getting weak. And if we come over here and look at this, CAD is stronger than the dollar by at least 3 points.
Yeah. It was changed around because it was 0.
Yeah. So now in a case like this, I would go down to a 1, and then I'd look for an arrow. There we had 2 entries. Right there. We had this one, which would have netted us 10 pips.
Yeah.
We had this one.
Yeah.
I mean, look at that. You can't ask for simpler.
Yeah.
But there's some work involved. And then you look at the MACD from this point here, MACD was short.
Yeah.
That's in conjunction with this and with this meter. All right. So now, and there we go. B bands going up, euro dollar 15-minute chart. So euro dollar 15-minute, and there's I must have this on more than one chart. And now if you look at this on the 15-minute, that's a great entry. We're above the 2.5s. We're above the 18. You see what I mean?
Yeah.
I mean, you can't, and this is green, and we're euro dollar. So euro should be higher than the dollar, and euro is 5 and change. The dollar is 2 and change. I mean, now you have to wait for this candle to close, obviously. But on a 1889, I would be in this already because that's our trend line break right there. You follow me? So and that's exactly how this is designed to work. When you get that pop-up box, come back, take a look, make an assessment, and then decide what you want to do. All right? And we've got a lot of room to the top here on the euro dollar and a cup and handle. I'll squeeze it in so you can see the cup and handle a little bit better.
Yeah.
Yeah, you see it? That's the cup.
Yep.
There's our handle. Boom. That's our takeoff. Maybe one day we'll go over all of these patterns. I bought a piece of software for 27, 30 bucks. Please, who is this now? Please send me in Skype EMA in the. I'm going to drop it in the room, Nancy. Okay, I can send it to you. I'll make sure you get it. So now that we have this blue arrow here, we can go down to a 5 if we wanted to really get into the trade, and there was a nice signal right there. So we'd be in this right here.
Yeah, you've already made your pips. Yeah.
Right. Then go down to a 1. And we had a whole bunch of arrows all over the place here on a 1. Yeah. And by the way, if I just want to show you something here. When you change time frames, that thing updates all the time. You see we're above the 55 here? All right. This is the 55, the dotted line.
Yeah.
If I go to a 5 and I'm above the 55 there, that's even better because now both time frames are in sync. And if I go to a 1 and if it's still above the 55, that's even better.
Yeah.
because they're all in line. So now you can go up your lot size a little bit and take a smaller bite to get the same amount of money.
Mhm.
Okay, so let's go Dollar Chef. Again, you see here blood red. All right, we got to bounce off of our 200 here, and we've got an arrow, a little bit, iffy, but I'd like to see a little divergence, which we have, and I'll just show you to you. This is more what the typical thing. I've got my divergence, and then the arrow after the divergence, that's easy pickings.
Yeah.
All
I can
right.
guarantee you it works, Lou, because I just took 2.1 pips off that EU.
Oh, okay. All right. That's good to hear. Good to hear. As long as it works for you, that's what counts, and as long as you understand it. All right. So we got nothing up here we can really work with as far as divergence. Because if I draw my line up here across these tops, I need to look down here, and you see there's nothing here I can really work with. All right. So, and it's a 1 minute chart. So let me go back to the 5 or the 15. And if there was a divergence here, oh, I would take this because if you look from here to here, we've got a divergence here on the 15. Every time I make a new high, that's what I start looking for. See that?
Yeah.
And I would take this back into here, which you did already. I don't know if it was 10 pips or not. There's 7 or 8 pips. Yeah, you can grab a few. But you get the idea now. When the arrow shows up, go back and start looking, and it teaches you to analyze the chart.
Yeah.
I just got to
That's
get
the
my.
good thing about it, isn't it? That the arrow sort of tells you just to analyze. It doesn't tell you just to jump
Yep.
straight in. It's
Right. You're not, it's not a dinner bell.
yeah.
So, and I know some people still swear this is all they trade, and they've
Love that
refined it.
chart.
They've added different indicators. There's one version that a guy has. We added the TDI,
Oh yeah, yeah, yeah.
because he looks for they what they call the shark in the water formation. And
Well, it's
again,
2 o'clock and 4.
there you go. You see that? That's going against the grain. You're going against the 55. You're going against the 200. But look, you got two divergences there. Okay, and then the
Yeah.
arrow shows up after the divergence. Because remember, this pin bar is closed already. That's when you can pop
Yeah.
your trend line at the close
Yeah.
of that pin bar. And then the arrow shows up after that. That's money in the bank. That's 8 pips to there, 17
So like,
pips to there, and your stop is a good 10 pip stop, which is what I like.
yeah.
10, 12 pips.
Yeah.
And if you change the numbers a little bit, let's go out to like a half-hour chart. You can see you can follow this the same way on the half-hour chart, or any number. You could just make your B bands a little bit faster or slower,
Yeah.
and it's still, a pretty robust system.
Yeah.
So the only thing I don't like about it, why I don't use it a lot in the sessions, is that this indicator I only have for MT4. So if you
Yeah.
go to a
Okay.
different, someplace else, you can't. So that's why I kind of refrain from it. But if
Yeah.
MT4 is the only thing you're going to trade, well, then this is a good starter system, you
Yeah.
know. And like I said, anywhere from 3 to 8 pips on a good scalp, you can knock that off 8 or 9 of those a day.
Well,
Uh,
Lou, I mean, you can always put it on an MT4 chart and then trade whatever you want. As
oh,
far as
absolutely, yeah, yeah. We're working on some APIs too, which I'm kind of excited about.
which is what?
It's a patch, to make a long story short, so that if I take this trade on my MetaTrader 4, that trade
Oh,
automatically goes into NinjaTrader
okay.
Oh,
or
okay.
Trade Signal or
Yeah.
Schwab. So I'm just really really excited about that.
Wow.
Yeah. So it's cool.
You'll soon achieve geek status.
Maybe I don't know. Um, it's more I need to pay bill status, to be honest with you. That's the God's honest truth.
Well,
I
yeah.
love I love
I
this
mean,
chart though.
Oh, wait. Oh, damn, is it 10 o'clock? Shit.
Yeah.
I'm gonna go a couple more minutes, because I started late. I want to go to the what do you call it room? Pip Factory. Okay, I'm gonna drop it's a zip file with all the indicators and the template and everything in the what do you call it room. Oh,
Yeah.
you know what? Just let me answer this because I did tell him 10 o'clock, so let me not. Good morning. Good morning.
Okay. Michael?
And
Yes.
now they hung up. Okay, so they hung up. What was I going to say? It's in the what do you call it room. Oh, and remember to adjust your this particular indicator, uh, your time chart bottom. Make sure you get that to your local time if you decide to use that indicator.
Okay.
All right. Based on what part of the country you're in and all that.
To local time or broker time?
Well, no, I have this set to my local time. So
I
in other
see.
words, see, 10 a.m. here is 1400 hours on the broker. But just the way I need to know, 10 a.m. in the morning, that's what I need to know, kind of thing. So, and this is actually off. Oh, I just put this on yesterday and didn't set it up right. So I have to change this. I have to set this back 1 hour. So indicator list, time chart bottom, edit. Yeah, this should be a 6, I think, on this broker. Let me just see what it pans out to. 8:39. No, this should be just after 10 o'clock. So let's go back and indicator list, time chart bottom. Let's make this a 7 and see where that pans out. I might have to make it a 5. Oh yeah, so this should be a 5 because every broker, they're on a different time chart bottom edit. This should be a 5 then because this should say 10 o'clock right now. There we are, 10 o'clock. Okay, and it's a 5-minute chart, so that's the 10 o'clock candle. This is the 10:05 candle, and this candle should be from 10:10 into 10:15.
Right.
So make sure that that's correct if you choose to use it.
You were going to take a minute and do a long term?
Yeah. I'll get to that in a second.
Okay.
Just want to make sure everybody understands the setup, and I have to shift this box over. This blue box should actually start here at 7 a.m. You see that? So when I reset the blue box, I go into iParamount work time, and I set my blue box for US from 12 to 15. You got me? But I'll sort all that out. So now let's go on to something else here. Let's get a new. I don't need this anymore. Uh, BW clean. Here we go. Oh, I do have a guppy. Shit. Uh, guppy. All right. Well, I don't have both of them on.
No.
But you see how these are. Let's look at this one. That's a 3. This should be a 5, 7, 9, a 7, 11 skips. But what you see about with the guppies, which is interesting, let me turn this off, is when they all collapse on each other like this or like this, that's a precursor to a nice move coming up. Okay, and then what they add to this is they skip and they do like the 21, 23, 25, 28. And then when they all collapse, because the 21 and up, they represent longer term position traders. And that's the general thinking. All right. So let's, I thought I had the whole guppy up here, but I don't. I'll add it later. BW clean. Let me just add some indicators here. File. Um, That's the new candle alarm. That's a different one. Okay, so file. I'll do it this way. And I'm looking for my regular RSI. Oh, that'd be here. Relative strength index. And this should be a 3. I need to write clearer notes for myself sometimes. Okay, and this should be 80 and 20 actually too. Let me fix that. Indicators, relative strength, edit, levels. And 80. Okay, so we got our 20 and 80 there, and now I want to add my stochastics. And this is going to be a 6. And is there another note I had here? Okay, and now I'm going to add a moving average. I'm going to put an 89 up here. Indicators, trend, moving average. Let's make this an 89. And I'll add the other one too, as a matter of fact. And the insert indicators, trend, moving average is, let me add a 150. And we'll make this one red. Not much of a difference for what this is. And now I'm going to go out. I'll do this on the daily chart. Now, what we're looking for here on the daily, I don't like both these moving averages up here. I'll take the 89 off for the moment and leave the 150. What we're looking for here are pairing up of our overboughts and oversold of our extremes on our oscillators. All right. And this is a relatively simple. I like it on the daily and the 4-hour. And this is one I used a long time ago. That was also a good one when I had to go to work. So what we want is for price to be, we're above our 150. Okay. And the ideally what you'd be looking for is a touch of the 20 on the a touch or an oversold rather on our RSI down here, and ideally I'd like to see this at its oversold also. All right, now in this case we don't have it, but knowing me, because this is a conditional candle, I would jump on this crossover. But I just want to show you a couple of the standard setups. This would be a short right here. All right, because we're oversold, overbought, and then we've got our cross down right here on this black candle. This would be a short. Now it's 90 pips, which isn't bad, with your stop back out at the high of this candle. If your stop was, if your take profit was more than that, you probably would have been stopped out on it. But that's the ideal situation there. Okay, now here we have a short. Here we're oversold, overbought again, and then on the stochastic cross back, that's our short trade right here. This is our entry. Okay. Now there's a couple of ways to handle the exit. Well, then let me just show you a few more of these. Here's another short here. We're overbought, and you see where we become overbought right here on the stochastic, and then the stochastic cross short happens here or here. and then this is this would be your short entry. Now again, I'm showing you this just because it happens to set up. Ideally, you like to be above the 150. So at this point, you're only looking for long trades. All right. Let me turn this off. This is another one. I had this automated. I just can't find the damn EA file. Here's a short trade where you see we're at the extreme. We're bouncing off the 150. We're overbought, and then on the stochastic cross short right there at the close of this candle is your entry short. All right. Let's go back, look for another one. Here's another one here. We're overbought, and we just touched the overbought here on the stochastics. I think you see that, right? Let me blow it up just in case you can't. You see where we went overbought here?
Yep.
Right.
Just by a bar. Now on the stochastic cross short, which occurs on this candle, this is your entry short, and that's 200 pips. All right.
Wow.
Here is another one here where we just tagged the overbought. We tagged the overbought there. We tagged the overbought on this one a bit later, but here's our stochastic cross on this candle. And this is, let's call it 150. All right.
You had a divergence.
Yeah, right here. Yep. All right, but it's very, very simple. The trick here is just waiting. Now this is a kind of a key thing. Here we're overbought, oversold. We don't enter a trade until we get back up in here, because once these stay down here for a while, you may not want to take this one. You may not want to take this one. You want to wait until we actually come back through on the stochastic. The stochastic will lead the way in this case. You got me?
Yeah.
So right here is where you'd want to enter this trade long, either on this candle or this candle. All right? And, oh, I'm doing it the wrong way. But let's take the worst of the two entries, and that was 400 pips.
Would you mind going back to what was it, the
Let
end
me
of
give you
last
control. Well, no, let me give you control.
Okay.
Going back to what?
I'm thinking, the end of last year when the euro and the pound just took a giant dump.
Well, that's kind of curve fitting, but yeah, we'll do it.
I mean, just to kind of see how
2014.
during its worst time.
Okay, right in here you're saying.
Let me see. But
Well, this is where the dump.
Yeah. Here we go. Yeah.
And
This
as
whole
you,
time here.
right, well, you see here, we're oversold, overbought. We're bouncing off our 150.
Right.
We got a stochastic cross short. I don't know if that's exactly what you're looking for. Here,
Well, I just wanted to see if there was any longs that didn't pan out.
well, panning out has to do with your stop loss and your take profit.
Mm-hmm.
So, and we'll touch on that in a minute. But here is another example: oversold, our stochastic cross right there. We wait till we get above the 150, and that was 300 pips before, depending on your stop and all that. That's 300 pips there. All right, here's another entry here. Okay, here is another entry. All right, we're not quite at the extreme, but again, as long as we're above this, if both of these oscillators match up, that's when you want to take a run at it. Here's another one. We came all the way down where we're oversold, and then if I squeeze this chart out, which I can do this down here, the MT4. I'm so used to using so many different. Oh, I lost the spot, but okay. But you again overbought. This is that example here where we go oversold rather. And we wait. The stochastics will lead the way on this. Once it gets under here and stays here, remember this stayed under here for a week. And once we get, you see where the stochastic comes back above?
Yeah.
Right in there. And then that happens to be what we call a conditional candle. It closed more than 50% into the body of the prior candle. You're in right there. Okay, our first pullback gave us 100 pips. Second pullback gave us 100, and let's say 200. and the third one. And it's like shooting fish in a barrel. It really
Wow.
is. Now, there's another version of stochastics that I want to add to this because I used to do this manually, but now there's a stochastics that will give you a pop-up once you get overbought or oversold, and that I wanted to use that. There's also an RSI that'll do it too. But back when I was doing this, I didn't know about that kind of stuff. You know what I mean? I would just set it up, and it was easy because I'd come back and I'd come home 7, 8 at night after work, take a look at the charts. Oh yeah, we got something setting up, and then I'd say, okay, maybe Tuesday. So then I'll come back. I'll check it every night at 5 o'clock. Takes 2 minutes. So for instance, on this given day, we are on the 5th. Okay. No, on the that's the daily candle. Okay, so this is the 5th.
No, it's the 14th, Lou.
Oh, I'm sorry, 14th. Oh, 14th at 00. Yeah, daily candle starts at 00. Oh, yeah, so this is the 14th. So I'm waiting until that blue line comes back up above the 20, and that didn't happen until the 17th, 3 days later. Well, let's say the 18th actually,
Mm.
or the 20th. So I had to wait a few days for it, but gee, how much effort am I exerting if I'm only looking at the damn thing at 8 o'clock at night? You could run through 20 pairs like this, and now that's my entry long. That's my stop right there. A little bit meaty, but because the risk reward is so great, I don't mind the 100 pip stop. All right. Any questions or thoughts? And it's really simple. I mean, sometimes the simple is better. Here we're overbought, okay, and this could be considered a bounce. When you're on this red line, when that's flat, you do take a bit more of a chance, but as long as you follow the indicators, you should be able to pull some money off the market.
So, any other time frames on this?
Well, but again, the way my life was, I could only look at the charts at night at 8 o'clock.
Oh, I see. Okay.
So I've always used it on the daily or the 4 hour. So, or if I saw a daily setting up, I might jump to the 4 hour, like, let's go to current time. There's nothing here really. Oh, this one. Okay, let me mark this. So let's say at this candle, oh shit, I now realize that I'm overbought. Or, you know what I mean. Okay, my bingo right there. My RSI is now overbought. I'm waiting for stochastics to match it. So now I'll go down to a 4 hour and maybe get in with a little better stop or whatever.
Mm-hmm.
You get what I mean? So I've got this here. You see well, you see I've got the overbought here, the overbought here. I got a half a Batman, and we'll get into these names on this RSI another time. But you get the idea. The concept would be to wait for this to match it and then wait for this cross to come into play. Once this crosses back down and we get right there, that's when I want to, I got to come up here and do it. Slide this over. So you get like a precursor. One of these is going to get overbought. Usually it'll be the stochastic first. Now I go down to my 4 hour. And then you wait for it to turn around on you. You got me? So here would be my stochastic entry here. Right there when this comes back in over here. All right. So that would be at the close of this black candle. So let me just mark this. And now let's go back to the daily. And you see I'm entered short right in here. All right. Now I've got a 30 pip stop, but still there was about 100 pips of profit. Okay. You follow that?
Yep.
Yeah.
Now, the exit, I used to trade something called the roller coaster, which is similar to this, which is another one I would look at the chart at the end of the day. And we'll talk about a couple of different things here. Now, disregard the general entry rules. I just want to show you a couple of ways of managing exits. let's take this situation here. We're overbought, and we're waiting for the stochastic to come back through. So that's at the open of this candle. So now we ride this down, ride this down, ride this down until we get the cross back right here. You see that? And that's how we would handle that specific type of exit. Looking for a long trade. We've got a long setup right here. We've got entries in here. That's already 100 pips already. But let me find a long setup. Here's a long setup here. Okay, oversold, stochastic comes back in. We're long here. We can ride this until we get the stochastic cross back, which is right there. So we're in here to there is 120 pips. So if you need a mechanical exit, this would certainly be an easy one. It's the same indicator on the same chart. All right. The other thing with this too would be, and this is a little, I won't say advanced, but I don't want to throw too many twists at you at the same time. But on this RSI, I've always loved these trend line breaks on RSI. So now we've got our entry here. You follow me? We technically have a trend line break right in here too to match it, because you want to draw across the last two peaks on the RSI. So that would be this peak and this would be a confirming entry here. You see that? To take that trade long. But this is really, really simple. And let me just show you the settings on it. I have the recorder on and I'll update this. It's an old system. I made a little bit of a tweak on it, but you see my overbought and oversold at 80 and 20. The relative strength index is set to a 3. And remember, we were talking about the RSI 2, which is funny to see this come back so many years later. And now I have my stochastics are set to 633, and my levels on the stochastic are 80 and 20.
Lou, do you even need the RSI on there? Because the RSI and the stocks are never going to be in conflict with each other, are they?
No, not necessarily. I prefer, because they're measuring slightly different things.
Yeah.
You know, like you see this touch right here?
Yeah.
We don't get it here.
No, absolutely. Yeah.
So they're not, out of sync. It's just that when they both collectively get overbought and oversold, because they're measuring slightly different things, that is a better indicator that, this might be the new direction. And as you can see on the RSI, we touched, we got nothing here. We touched, we got nothing here.
Yeah.
So it's very similar to that location thing.
Okay, what we call belt and braces in England. Yeah, okay.
Okay, belt and braces?
What do you call braces? Suspenders? I don't know. What you
Oh, okay, yes, suspenders.
Yeah,
braces go.
Different here in England, but
yeah. Oh well, braces go on our teeth here in this country.
Yeah. Well, they do here too, but.
Okay. But you see here we have the touch, and we're nowhere near it over here. Not even near it. So okay, so we missed this, but you're not going to get every one, but there's plenty, especially when you look at all the pairs. You know what I'm saying? So that's why when they both work in conjunction, it tends to be a pretty decent setup.
Yeah, that's good.
All right, and it's like I said, I liked it on the daily because it was simple for me, because I could just come and look at the end of the day and look at it, and you can always add like a 15-20 pip trailing stop once you pick up 50 pips.
Yeah.
You know what I'm saying?
Yeah.
So
and the parameters in the stocks, Lou, is that based on close?
Yeah, let's just take a look just to be sure. I know I kept them pretty much what the
low high.
Low, high, simple.
And simple. Okay, yeah, okay.
All right. And let's go back to the RSI and just double check that. Apply to close.
Yeah.
Levels 80-20, nothing. Okay.
Yeah.
All right.
Yep, that's fine. Thank you.
All right. So we will go back to looking for a couple of trades tomorrow and pick it up from there.
That's great, Lou.
All right.
Yeah.
Yeah, I think you explained it much more in depth this time than you did when you were in Roger's room a couple of years ago.
Definitely you did, because that was pretty much an impromptu lesson that,
Right. And it was his room, and I didn't want
Yeah,
to
it was
take it
his
over.
room, yeah, exactly. Yeah, you didn't want to sort of, yeah.
And I wasn't there to recruit or anything like that. And I have to be careful because people get real touchy,
Yeah,
and I got enough to do. You know what I mean?
yeah, yeah.
Spa FX, could you post your name in the chat box? So if you come back in, we know who you are. I see Naeem left. I don't know who that is either. I said Ralph provided me with the link. Nancy, did you get the indicators? Oh, I guess you did get them. As soon as I mentioned, who is Keith now?
How do these
Keith,
people get in the room?
yeah, I don't know. Someone's sharing the link. Keith, are you Spa FX or someone else? Keith, you there?
Yeah, you said yes in the chat, Lou.
Okay. I'm sorry. Yeah, I didn't see the chat. Okay, thanks. All right, good. So we'll pick this up again tomorrow, 8:30, same time. We'll start, looking for live trades, and we'll make a go of it. All right?
Yeah, thanks, Lou. That's a great lesson. Great lesson.
All right.
Yep.
Yep. Be well, everybody.
Okay, thank you.
Yeah, cheers, Lou.